Good afternoon and welcome to today's FinXTech Exchange focused on mobile banking strategy. A mobile banking strategy can include a variety of solutions from a conversational user experience to a simplified and speedy account opening process. With so many solutions competing for attention in our digital world, we thought it would be helpful to gather today to discuss new developments in mobile banking. I'm Lexi Grindstaff, Director of Business Development at Bank Director, and we thank you for joining us today. Today's FinXTech Exchange is brought to you by Bank Director and sponsored by Agent IQ and NARMI. If you've tuned into any previous FinXTech Exchanges, you know what I'm about to say, but before we get started, let me share just a few housekeeping items. First, you have joined this event in listen-only mode, which means you are automatically muted. For a better viewing experience, we recommend that you click the slide bar at the bottom of the screen to put the presenters into full screen mode. We encourage you to ask questions throughout the discussion today, so go ahead and note any questions you have by clicking the Q&A button found on the right side of your screen. And there is no need to take detailed notes, as this recording will be shared with all attendees within 24 hours via email and will also be made available on bankdirector.com. And lastly, if you have any technical issues, go ahead and note those using the moderator chat feature on the right-hand side of your screen, and we will do our best to take care of it. I'm really looking forward to the topics we're going to cover today, and I want to take a moment to introduce the speakers who will help us take a deeper dive into mobile banking strategies. To start, we have Soren Bested, the Chief Revenue Officer at Agent IQ. Agent IQ offers a digital platform supercharged with AI that improves communication and engagement between financial institutions and their customers. Soren's industry tenure has spanned 6 countries across 4 continents with 8 years in mobile banking specifically. Welcome, Soren.
Good afternoon. Thanks so much for having me, Lexi.
Yes, and our other panelist today is Caitlin Russenberger, who acts as a general manager at NARMI. She oversees a portfolio of customers and manages the entire post-sales and customer success experience. NARMI is a New York City-based financial technology firm that builds enterprise solutions in digital banking. Prior to joining NARMI, Caitlin spent over 10 years in various roles across customer success, strategy, and operations. Welcome, Caitlin.
Thank you so much for having me. Excited to be here today.
Great, we're excited to kick things off. So to get started, we're going to actually ask the audience a few poll questions to help guide our conversation today. So for those of you who are watching at home or in the office, you will see some poll questions appear in the sidebar near the Q&A button. Please go ahead and select the answer that best fits your bank, and when you've selected, you can hit the vote button to submit your response. All answers are anonymous. So as you can see, our first question is, how do you believe customers prefer to interact with your bank? Is that in person, at a branch, over the phone, or do you think they prefer interacting via digital channels? We'll go ahead and give a few moments for people to submit their responses. Have answers coming in now. Go ahead if you haven't, submit your response. Closing up here in just a few seconds. All right, poll results are in, and it looks like 72% believe that their customers prefer to interact via digital channels. Soren, do you think these responses fall in line with what you would expect?
Absolutely. And I think it's really interesting to see. I think we all recognize that the way we interact with each other, with our trusted financial advisors, are through digital channels. What I think becomes really exciting is when we start talking about, so what is it the customers want to interact on? Is it account management? Is it open-ended questions? So I'm really excited to dig into that conversation.
Yes, me too. And I mean, looking at those answers too, that's a significant difference with those who prefer digital channels. Caitlin, do you have anything to add there? Is that also what you were expecting?
Yeah, for sure. And I think it's also interesting to think about how that has changed through time, especially with the pandemic in recent years, and really just how important digital channels are, now. And
Yes. All right, so we're gonna move to our second poll question, which reads, what percentage of your customers primarily interact with your bank via digital channels? Your answers there. So if you had to judge the percentage of your customers, what would you say? Go ahead and submit your responses now. A few more options than last time, so I won't read through them all. We have answers coming in now, so we'll give that a few more moments. All right, let's see the final tallies. Okay, so it looks like 46%, say 45 to about 60% of their customers are interacting in that way. Interesting, 4% is more than 85%. And then 15% between 60 and 85%. So, Caitlin, when you're having initial conversations with potential clients, do you find that they have a similar percentage of customers that are interacting via digital channels?
We typically see a pretty wide range in terms of our prospective customers, and it really depends on that experience. Is it easy to engage or not? When in our platform, we actually see, a bit higher than that, closer to 80% of our customers engage with their digital platform.
That's interesting. Soren, what do you think about the 45 to 60% being the overarching answer here?
That's kind of in line with what I expected. I would say that I think the variability we see in the answers may be a reflection on what can you do with your bank digitally. Because when we think about, and I think that'll be interesting to talk to some of the participants about, when we think about engaging with your bank digitally, what does that mean? Is it account opening? Is it account management? Or is it, Lexi, I'm thinking about refinancing my house. Is that a good idea for me? Not is it a good idea in general, but is that, as my advice as the person I trust, is that right for me? And can I do that digitally or can I not? So I think that's will definitely impact the score, understanding what is it you can do. And I would imagine that for organizations that have adopted the idea of allowing their customers to engage with them, to talk to their own personal banker digitally, I would imagine they're the folks that are seeing 60, 85 and more percent choosing to engage digitally. We saw early on, Arvis Bank found that shortly after they launched Arvis Banker Connect, they found in a survey that 80% of their customers said they would rather use Arvis Banker Connect, their digital channel, than calling the call center or going to a branch. And I think that's the type of services that can really change the landscape.
Mm-hmm. Yes, I would definitely agree. Well, thank you all for participating in those polls. And Soren, when considering digital channels, kind of going off what you were saying, how do you view mobile banking in terms of its current ability to service customers?
So firstly, I'm a mobile banking nerd and lover. I spent 8 years in the industry. I was on kind of probably the second wave of mobile banking. So I think mobile banking is phenomenal. I use it myself every day, and I think it's imperative to have. Now, what I think is interesting is when I think about the term mobile banking, for me, banking is much more than managing my account. Now, 85% of my interactions are honestly checking my balance, depositing checks, and paying bills, probably in that order. But the more important interactions are the ones I mentioned before. I'm buying a car. I'm thinking about, as we spoke about before, Lexi, my twins are not too far off going off to college. So I need to find out, should I get a 529 account? But what if I leave the US? There are a lot of open-ended life stage questions that for me are probably the most important interactions when I think about banking, but are not the ones I do most frequently. So I think when we talk about mobile banking and interaction, we need to think about what is banking. I think mobile banking is a great term, but more often than not, it becomes mobile financial management. And I think that's where we need to start thinking about if we really want to acknowledge that customers are, more and more customers are either digital first or digital preferred, we need to think about how do we round out the service? How do we make it easy to be open-ended?
I think that's a really interesting distinction and really important distinction too. And what I'm hearing too from that is banking goes beyond just the transactions. And Caitlin, when it comes to mobile banking, what are ways that we can put the customer first versus technology first?
Yeah, and you know, I think a really interesting stat is that nearly half of the country uses mobile banking apps, but you know, more than 1/3 are actually unhappy with the mobile banking experience. So I just think that there's a huge opportunity there to really improve, you know, how we're serving customers, or how banks are serving customers. And when you think about, you know, customer first versus technology first, you know, when you think of a technology first approach, you know, that might include going to market with, you know, many features that, you know, it's unclear what kind of positive impact they have on customer engagement. And it actually might make it harder for them to engage quickly and conveniently with, you know, a bank. But really putting a customer first is being thoughtful about those features and really thinking about the design in a way that makes it easy for them to engage with the features and the features that they need. So as an example of this, you know, something that NARMI recently did was a redesign of our accounts and dashboard pages. So these are really important pages for our customers, and our research showed that these are, you know, the primary places that our customers will go and visit, you know, when they first log into their app. And so making it really seamless for them to get on that landing page and then access, you know, what else they need within the app in a really seamless and intuitive way has really helped, you know, improve our engagement rates.
That's great. And Soren, to continue with, you know, thinking customer first versus technology first, I know that Agent IQ allows customers to have personal conversations with their banker through mobile channels. And what are you seeing customers thinking about with their bankers through these channels?
Great question, Lexi, because you know, when I started this journey about 5 years ago, our big concern was that if you allow a customer to interact with not a banker, but their personal banker, that I would show up and go, hey, Lexi, what's my balance? Because that would be terrible. You have people like Caitlin and NARMI building amazing experiences where that's sent it right to me. So it's one of the areas where we're fortunate to have some very strong AI capabilities to analyze conversations. And that gives us an insight into, you have 5,000 conversations a week. What are your customers asking about? Are they just showing up and checking on their accounts? And that's been very valuable as we rolled out. Now, recently we released a case study with First National Bank Omaha. That was taken after the first 2 months and 5,000 users. In that case study, we saw a little more than 64% of all interactions between customers and bankers when we analyzed the customer's question, not the banker's statement, the customer's questions were about products and services that the customer did not have yet. It was credit cards, it was auto loans, it was mortgages, and it was wealth management. So it's really a way of saying, I'm looking at my accounts, I have $15,000 in my checking account, and this is probably a good time to interact with my banker, because either I'm planning to do something with my $15,000 and maybe my bank can really help me, and if not, they can definitely help me, because $15,000 in a checking account is too much. You need to do something better with that. If nothing else, put them in a savings account. So it's a way of saying, you know, how do we what is it the customers care about? I think the 65% of customers asking about new products and services are fairly standard across our clients today.
That's
in my mind, that is really important, because if you often we think about, you know, as a bank, we decide who we are. Either we are one of the top or one of the big five. And if we're one of the big five, it's all about efficiency, consistency, anyway. If we're not one of those top five, what is it we do better than anybody else? Well, we relate to our customers. We become relevant. We become Lexi, my banker, that knows that I have a funny accent because I'm not from here, so I need some help understanding the US system. I have 13-year-old twins, so I'm staring down the barrel of a very large college bill. And that's where you can come in and say, you know what, Soren, let me talk you through this. These are the options you have. This is what I would do if I were your shoes. Because we are seeing, while we read about customers wanting to be digital every day, and they do, but customers are expecting guidance and advice. We saw, was it 78% of customers said they expect guidance and advice from their primary financial institution. We need to capitalize on that. We need to capitalize on the fact that we earn the trust of our customers, that we have the right to come to them and say, Soren, $70,000 on a really cool truck is not the best idea right now. I think you need to do something else.
Yes, that's great. And I'll just say a reminder that you can submit a question at any time during our conversation, again, on the right-hand side of your screen. And Caitlin, we did have a question, and someone's curious that what do you think are the biggest pain points consumers have with mobile banking today?
Yeah, I think there are a few of them. We talk about how there's a large percentage that are dissatisfied with the experience. And so, I think there's, most studies have actually cited that a lot of that dissatisfaction is focused on the difficulty in opening an account digitally. So this really is important for banks, right? This is how you get folks in the door and increase deposits, and having that really great experience from that onset can really improve digital application completion rates, and ultimately, how many people banks can convert to customers. So, whereas I think previously this was more of a check the box exercise, either you have it or you don't, now it's just increasingly important to, really evaluate the quality of that experience. And, as in research that we've seen, 1 in 8 US adults who have actually opened a checking account say the digital services that are provided as part of that account was one of the most important factors in selecting a bank for them.
Oh, wow. Soren, do you have any other thoughts to build upon, some of what Caitlin shared as far as pain points go, or maybe some limitations you've seen for customers in their current mobile banking apps?
Yeah, I think so. I think, Caitlin, what you called out, account opening, is a very, very important one. I do think that mobile banking as it is today, very often is very good for data access. I can see my balance, I can pay a bill, I can deposit a check. I do think that what do you do next? How do I go about, if my balance is lower than expected, or if I have more money, how do I go beyond that? I think that's where we kind of walked ourselves down this path of saying, well, I have a couple of different types of customers. I have digital customers, I have branch customers, and I have a combination. No, we don't. We have customers. And sometimes these customers like to be digital first. I would never go to a branch to deposit a check, especially with an Army app. I would never have to, fortunately. But I would say each of us have different risk tolerance. And for one person, doing a $5,000 transaction is the area where they can do it themselves. But they need Lexi to show up and say, no, Soren, this is right. You're doing the right thing right now. For other people, doing a $50,000 transaction is daily. They have no risk about it. So I think what we need to ensure that we blend the transactional with the interactive and the emotional around it, because nothing is more important to us than our financial lives. So very often it's about just having somebody assure you, somebody that you recognize and accept as an expert, saying, no, Soren, you're doing the right thing here. And I think that is often where we see the wheels come off. I can do the transaction myself, but I just don't dare do it without just getting somebody to pat me on the back.
And I heard you say in there, Soren, you mentioned the word ease. And Caitlin, I think that a lot of bankers on this call would agree that convenience is something that customers expect. So how would you define convenience in the mobile channel? Is it through features, functionality? Is it more ease of use? What do you think?
Yeah, I think it really comes down to speed and simplicity. The longer a process takes, the more likely, consumer will get frustrated, will have a poor experience. So really focusing on speed and simplicity is, one of the keys to delighting customers. So kind of putting that into practice, In digital banking, sometimes you get mobile banking experiences that are really clunky and inconvenient. And a lot of times this happens because there's a lot of disparate systems that are, being combined in a Frankenstein approach. And that really creates a clunky experience. It's not seamless. It's not intuitive. It feels very disjointed. And so when you're able to bring together those features in a really seamless way, it just helps improve the experience and the ease of use of the platform. And Narmi really does this by utilizing our application framework. It's an open API framework that really gives financial institutions a low-code method for building integrations and adding, great partners within the fintech space, like Agent IQ. It's really seamless, and we've seen a lot of great success in financial institutions utilizing this framework to better serve the needs of their customers. Soren talked about how there's like a touch of personalization, and maybe a bank in Maine is a little bit different than in serving their customers than a bank in New Mexico. And so how do we really enable them to serve their customers in the best possible way and in a seamless and simple way? And we've again seen a lot of success with this with our application framework in enabling financial institutions.
And I want to build on that just a little bit too, Caitlin. So how are banks able to incorporate and integrate kind of that marketplace of solutions without compromising the ease of use? Because I think sometimes, even as you opened, having a lot of different capabilities sometimes can be clunky. So how can they incorporate and integrate without losing that?
Yeah, with our application framework and what we call our app exchange, there's a multitude of financial institutions and fintechs that seamlessly integrate in our app, and it feels like one unified experience. And so it's really a one-stop shop that makes banking easy. And when you think about some of the mobile experiences that we're competing with, the Amazons of the world, where everything is customizable, easy to use, really intuitive, really trying to take the notes from those experiences and incorporate that into the mobile banking experience. So for example, our digital account opening product allows users to customize which accounts they want to open in a shopping cart-like experience. So, I want to pick this checking account and this savings account, maybe this CD, and, brings them through the process and then allows them to, fund these accounts with either an ACH or a credit card. And so really kind of bringing that experience that we see in other industries that have, proved to be very successful in the mobile space, and really using that to build a really great and easy to use platforms for our customers.
That's great. And Soren, I think something else that can provide ease of use is a personal service model. And I have a question to kind of build off that, but to start, can you explain in your words what a personal service model is?
Yeah, I can try at least. I think a good starting point, what we did 5 years back, we looked at, let's try to forget everything we know about banking just for half a day and think about how do we engage with people. So when I travel, how do I talk to my twins? How do I talk to my wife? It's consistently Facebook Messenger. How do I talk to the people I know from overseas? It's WhatsApp. How do I talk to my colleagues? It's Slack predominantly. Now, what do all these services have in common? Well, firstly, they're asynchronous. We don't have to be available at the same time. I can send a message to my wife, and invariably she's going to be busy, so she responds to me when it's convenient to her. What's the second thing? So asynchronous, I think, is very important. Secondly, what is a defining factor? I know who I'm talking to. There is a whole backlog of history, and I hit the person. I do not send a message to my family. I send a message to my son or to my daughter, and so it's very personal. And we thought, what if we were to replicate that in banking? Because we hear from community banks every week that, well, we have people that like to come into the branch, and if Lexi is not available, they'll say, I'll wait for Lexi. She knows me. I'll wait for her instead of going to somebody else. Now, why don't let's embrace that. let's tell our customers, you know what, even though this is digital, you get to select your own banker. So you as bank can allow your bankers to be available within this digital framework and say, Soren, you can select the banker you want to work with. It may be Lexi, it may be Caitlin, but you select your banker, and that's the person you interact with all the time. Now we know that Alexi or Caitlin, even though you know a lot, you maybe cannot be an expert on everything. So sometimes, Lexi, you're going to be my banker. Sometimes you're going to be my, for lack of a better term, my concierge. The one that goes, hey, Soren, what you're talking about is really a HELOC loan, and would it be okay if I ask my colleague Frank, who's an expert on that, to join our conversation? So it's this idea that you make it very personal. You make it consistent, you make it asynchronous. I can send my message to you at 11 o'clock at night without feeling bad about it, because you're a human being, and I know you always get back to me. And we make it very easy for me not to try or not to learn how the bank operate, but I'm going to go to Lexi for everything, and Lexi has always been good at engaging me. I think the last thing, and that's for me probably the biggest differentiator when we start talking about personal engagement, is the proactive nature. Right now, we ask our bankers to be proactive with the customers, and that means sending an email. Emails are not personal; they go to spam all the time. I twice a day I clear my inbox for things I'm not going to read. Phone calls, it is really hard to get through on a phone call. A bank shared with me last week that it takes on average 15 calls to get to a customer. Not because we don't want to talk to our bankers, it's because the time, the point of a day where the bank has time to call us is the point of the day that we are busy. So imagine if you can allow the bankers to proactively reach out and say, hey, Lexi, I want to talk about those $15,000 in your checking account. Lexi, you don't have to pick it up right now. You get notified that you have a message from Soren. Soren wants to talk about something. You can address it anytime you want. It can be right now, it can be tomorrow, it can be a week from now. And that has been transformational. We saw a smaller organization we work with in Phoenix. They allowed their marketing team to look at what are customers asking about. And as I mentioned before, we use AI to analyze all conversations. So you get a nice visual of saying, what are the top topics right now? What is trending? And the marketing team then turned around and told the bankers to say, if you want to proactively reach out to your customers, right now, auto loans is really big. So there the banks say, well, if you may want to open a conversation and go out to all your customers and say, hey, if you are thinking about auto loans, we have some really good deals right now. And if that's of interest, just let me know. Make it very informal. They had one of their bankers closed just north of 160,000 in new auto loans within 48 hours. So having that ability to understand what our customers talking about and make it easy to be proactive, because we are, as people, we have a backlog of things we ought to do, but life always gets in the way. So we can make it very easy for banks to say, hey, Soren, what can I do for you? And most of the time I'm going to go, no, I'm fine actually. But now that you're here, I did want to talk about, is this the time for me to sell my house? Whatever it may be.
That 15 calls per client, that's what stuck out to me. That's a lot of time trying to connect.
It is a lot of time, isn't it? And even if we watch The Pursuit of Happiness, even with 2 phones, speed dialing is hard, right?
So transitioning just a little bit, Caitlin, I feel like oftentimes community banks don't view the account opening experience as an investment. Rather, they think of it more as an expense. How would you start to shift this perspective?
Yeah, and that's something that I get that perspective, because sometimes banks can spend a lot on marketing efforts, including billboards, advertising in sporting arenas. But that spend really isn't going to be efficient if customers or potential customers go to your website to try to open an account and it's a long and clunky experience. You really just lost them at your doorstep, and that's really unfortunate. So investing in a great digital experience for account opening is so important. The industry average in terms of application completion rates is only 30%. With the Normie platform, we tend to see 80% and higher of completion rates, which is something that we're really proud of. that means that NARMI customers get 2.5 times more accounts opened on their core than the industry average. And to put that in a slightly different way, NARMI customers would have to spend 250% more in marketing dollars to achieve the same result with other, account opening, or with the average account opening platform. So, shifting it from a cost to a revenue perspective, I think, is one that really helps, banks kind of get that investment.
No, those are also strong statistics. Soren?
Could I add also a perspective that I think is really interesting? We have seen a number of our clients have said online account opening is a must-have, and Caitlin, I couldn't agree more with you. There's nothing worse being, again, a parent of teenagers, so we have to open accounts for them now, give them their own first debit card with bated breath. Having a suboptimal account opening experience is terrible, because you try it out and first time you encounter a little bit of friction, you're going to walk away because maybe somebody else can do it better. So I think what you're saying is incredibly important. What we've seen a number of our partners, Arvis Bank and others, really be successful with is overlay the account opening process, because we don't know when somebody in the second language like me is going to stumble over something. So why wouldn't we make it very easy to say, after I've been sitting on a page for 45 seconds, pop up and say, Soren, do you want to talk to a person? Is there anything I can help you with? And I think there are two elements to that. There is the human element. You're making it, again, you portray yourself as a bank that really care. Secondly, if you can engage people at this time, that's a perfect opportunity to go, well, Caitlin, you're able to open your account, congrats, your debit card is in the mail, we're very happy to have you as a customer. You can start that conversation of, now, why did you really come here? Because nobody comes to a bank to get a checking account. There's normally something behind it. There's a checking account because I'm interested in a car, or I'm interested in a savings account, or there's normally a bigger need than just a checking account. But a checking account is how you start. So imagine if I can engage Caitlin at this point, say, phenomenal, we're all feeling great because the NARMI account opening experience was really good. But what do we do next? Let's start engaging that. And I go, hey, Caitlin, if you jump onto our online banking, mobile banking now, we can connect. I'll reach out to you in a couple of days. You'll get a push notification. Just check that everything is okay, that your debit card is working, and then let's talk some more. And I think that opportunity to go from being a single product account holder that we know is very often not profitable for a bank to drive. I don't like to use selling because it sounds wrong. But if you have a convenient way of doing needs discovery and understand why did your customer really come here, and engage them while you still have their attention during the first 2 weeks, I think that's really important.
We have a few questions coming in, so I'm going to start with this first. Someone is asking, how do you maintain trust in a mobile banking experience with the increasing fraud activity? Caitlin, I'll go to you first and then over to get Soren's thoughts too.
Yeah, so that's a great question, and security is something that is of the utmost importance to NARMI, and I think there's a few ways that we really enable our customers to protect themselves against fraud. So first, during digital account opening, having really robust KYC procedures to open an account. Make sure that the person who's opening the account is who they say they are. Making it a very secure and thorough process. On the same side of that, you do want to make sure that there's not a ton of friction and tension there. So, we're able to have a really robust KYC process without asking out of wallet questions or requiring a driver's license. So that, again, provides a really great experience for customers when they are opening their account, makes it really seamless, but also, make sure that there's a high degree of security. And then within our digital platform, have several ways that we protect against fraud and really enable our customers to customize those approaches as well. So one of our most popular features is something that we call our risk rules, which let our customers configure different rules and actions that can trigger different outcomes. So for example, the classic one is if a user tries to enter a password and it fails for a certain number of times, they can be locked out. And that's a very basic one, but we allow our customers to have very sophisticated ones as well. So for example, if a user resets their password and then tries to transfer more than $1,000, let's say, threshold is totally configurable, but that can then cause that transaction to go into review and needs to be approved by the FI before it can go through. And that helps to prevent against instances of fraud where, for example, someone gains access to an email account, then can reset passwords and make large transfers outside of the user's accounts. So those are two features that we have, but definitely more, and definitely something that we're focused on moving forward as the world of fraud and those fraudsters continually evolve and seem to get smarter and smarter all the time. We're continually assessing our platforms and how we can continue to evolve and adapt and try to stay one step ahead of them.
Soren, how would you say it's important for banks to maintain trust with mobile banking amidst all the increased fraud?
Yeah, I think that's a great question. I think there are a couple of things that we can do as banks, and both as banks ourselves, and when we think about our customers. Firstly, as a bank, and that's gonna sound maybe trivial, but it's not. Let's start by evaluating our vendors. Are they SOC 2 Type 2 compliant? If they're not grown-ups, right? They may be a bunch of 25-year-old in the basement that are amazingly good at coding, but do they understand the security environment around banking? So thinking about what is the compliance standard about it, how is data stored, how is it secured, how is customer access managed and authenticated. So I think from a bank perspective, there's an element we can do. I think from a customer perspective, there's something we can do. There's the actual security, and then there's perceived security. So if something goes wrong, how easy it is for a customer to come to us. And the famous saying is, when was the last time you called Amazon? You can't. Right. Amazon, though, have pulled in a lot of other mitigating factors. So I think the ability to ensure if the customer has any doubt or any fear or uncertainty, make it really easy for them to get supported. And I think that's perceptional wise is really important, because yes, there are always a risk of fraud, and we are going to run into that sometimes. But what ultimately defines how customer sees us is not that we're able to prevent 100% of the fraud. It was, how did we respond to the 0.001% of fraud that actually occurred? Did we make it really easy? Did we send them in a loop? How can I help you? Press 1 to talk to somebody. Press 2 if you have fraud. Is it that journey, or is it I can just go to my Caitlin, go, hey Caitlin, I don't get it. I saw a transaction that's not mine, and you can go, don't worry, I'm on it. You're good. You're covered, and I will look after it. I think that's really important to our customers. That's ultimately what they want.
Mm-hmm. Yes, definitely. Okay, another submitted question. This one is for Caitlin. What is the acceptable amount of time to open an account from a mobile app, a mobile device, from a non-customer perspective? And then what are some of the main pain points you see for people abandoning that process?
Yeah, so some of the statistics that we're seeing, 75% of banks report that it takes longer than 5 minutes to open an account online, and there's about close to 30% that it takes longer than 10 minutes. So when you're looking at that amount of time to complete an account, you really risk having abandonment rate increase. Users get frustrated. They give up if it's not easy and not that immediate kind of satisfaction and progress that they're used to seeing in their digital interactions. I think in terms of that, also in terms of the number of clicks that it takes. So clicking through a lot of screens and it certainly contributes to the amount of time it takes, but also the amount of effort it takes, and again can contribute to a high level of abandonment as well. And you compare that experience to the experience of applying for an Apple Card, for example, where a user can actually receive approval and begin using an Apple Card in minutes. So that's really the interaction that they expect to have with, with their interactions on a mobile and digital basis. So, within Army, activating a user and getting them signed up for an account, thanks to kind of 100% automated KYC decisioning, really can happen within minutes. And then, the next step of that in terms of getting them enrolled in online banking, can take 2 minutes after that as well. So having, again, that immediate satisfaction, immediate results, and taking, the customer seamlessly from, arriving at your doorstep into your home at your table, and able to, engage with them is, just an incredible experience for them. And then also for our customers, our financial institutions that can then really start to develop those strong relationships, and continue to engage their customers and ultimately, become the primary financial institution. I think when you provide that type of experience, and users are really thrilled with the platforms, they're going to want to engage with your financial institution over others, and that's really one of our primary ends.
Caitlin, you made a point earlier that I thought was really interesting. You mentioned the ability to open multiple accounts in a shopping cart type manner. So one of my pet peeves, again, coming out of more digital banking is if I've opened a checking account and I say, what, I'm going to do it, I'm going to open a savings account now. If I have to fill in all my details again, you just lost me. Not good enough, right? If I'm already a customer and you just ask me to enter my address, just not good enough. So I think there's some things around the initial opening and then subsequent. How easy is it for me to opt into additional product and services?
That's a great point. That would lose me as well, the duplicative responses, answers. And Soren, you touched on this a little bit, I think, when we were talking about risk more from the client and customer perspective. But what would you say, how can banks manage the risk, whether it's real or just perceived, in rolling out services like this?
That's a good question. I think there are one of the things we found very early on is that the most important thing to our customers is to feel that they're being heard. So if I come in and say, Caitlin, I really want to move $30,000 to a CD, for example, I need to be heard. It cannot be that I get dead-ended. Now, if there's some things that make it not convenient right now, say, hey, I'm sorry, Soren. This is a little bit troublesome. I'm going to just have to send you a quick form. I'm going to send you a DocuSign through this channel as well. But I think it's about, first and foremost, we need to make sure that the customer is comfortable, that they're being heard and are being managed. Now, on the back of that, we need to make sure that anything we do, any way we interact with our customers is retained. It's the typical encrypted in transit, encrypted at rest, and it's available for audits. We saw what JP Morgan Chase ran into just before Christmas, 200 million in fines for having conversations with customers that were not retained within the bank's framework. It was done through personal devices, personal emails, through WhatsApp, and not having the compliance element of these interactions managed and secure is certainly a very, very big risk. And I think we're going to see JP Morgan Chase was the first one after COVID. They're not going to be the last one.
I think it's important for bankers on this call to get a sense of how some of these different services could work with their existing mobile platforms. So I think it could be helpful if you could both give us a sense for how you would start that integration or implementation process. How long would something like that normally take? Caitlin, I'll go to you first.
Yeah, I actually would love to go back to a point that Soren made in terms of, having a customer feel engaged and, a personalized interaction. And I think the natural tension that comes up there is how do you give a customer a lot of information, but not overwhelm them? And I think it's a tricky balance. It can be a tricky balance to strike. And, going back to, I think a earlier point I probably glossed over in terms of the importance of design. in an interaction and making sure that it's very intuitive and very easy to engage with. That's really, you look at tech giants like Facebook and Twitter and Instagram, and they are able to connect with users and engage them and, give them the information that they want, that they need, and really, personalize it in a great way as well. And so something that we've been focusing on recently is pioneering what we call a mobile feed in banking. And really the goal here is to captivate users and engage them without actually even clicking. So how do they have everything at their fingertips that they need? How do we utilize the scrolling functionality? Because, it's quite effective, as we've seen in the social media space, probably because nothing holds our attention better than the unknown. But, playing with these different features that we talked about Amazon and the shopping cart feature, but also to social media, incorporating kind of some of those features into our platform has proved to be, really, really successful. And so I apologize for sidetracking your question, but, I think in terms of in the path to engaging, I think it really starts with evaluating, the current digital experience that your customers experience. So again, making sure that they have a really great UI UX. Right now, that's table stakes. And understanding what features are really important to them to have within their mobile banking platforms. So I think when you start with understanding your customers and then finding partners who can provide the services and the features that you need to address those needs of your customers. And again, Narmi really helps enable a really holistic experience and platform for our customers by enabling that app exchange experience. So, having a library of fintechs that we've already integrated with, and then making it really easy for new fintechs to join the Narmi umbrella and provide that really seamless experience within the platform for users to get what they need and be able to have a one-stop shop for their banking experience.
And Soren, what does the integration implementation look like from Agent IQ's perspective?
Good question. I think one of the things we've gotten so used to 6, 12, 18 months, and honestly 6, 12, 18 months are not okay. Some of the participants in this webinar may have read the case study we released last week. So one of our most recent banks to go live was Extraco Banks in Waco, Texas, about $2 billion, their Q2 shop. They launched web chat, AI-assisted web chat, personal engagement within their mobile app, video chat, SMS, and co-browsing within 6 weeks, end to end. So that's from the day we had our kickoff meeting to say this is what is it we want to do and when we would like to be live. And we did actually go live before the Christmas freeze on 15th December. And then we very often recommend a progressive rollout. Don't try to, what they say, how do you eat an elephant? One bite at a time. So do that. Start with very tactical things. Say, let's get started with this. We know this is not the end all be all, but 2 weeks from now, we're going to add another feature. A month after that, we're going to add another feature, etc. So we generally say we say that we think a reasonable implementation period from standing still is 4 to 8 weeks, and on the bank's appetite. We have done 4 weeks before with, for example, Park National Bank. Other banks need a little bit longer. But I think also very, very important is think about the end goal. That's one of the things we want to ensure is that we don't fire and forget. We don't launch a product and go, right, that was it. Now we're done. We can pass out on the floor. Instead, let's talk about what's next. This should be continuously evolving. And we're not continuously evolving if we don't think about this is really good right now. Imagine what it can be 6 months, 12 months from now. I think that's another element that I think is extremely important when we think about rolling out. The real work starts the day we go live. How do you engage with your partner? Is it do you talk to them weekly? How often do you reconfigure the platform? How often do you see software releases? Do you have to do anything for software release? Because that was the that was the old model, right? We we launch something and 18 months later we will come back to the bank and say, hey, it's time to upgrade, and that's going to take 2 months and a lot of QA resources. That's not okay anymore. Cloud-based services should be delivered. We like to run on a bi-weekly release cadence where the bank receives release notes, and of course any new feature is by default turned off until the bank gives us the nod that we can go ahead. I think that's the kind of pace we need to work at. So I think it's both the implementation plus the what happens afterwards.
And we got a question submission here. Soren, I'm going to give this one to you. And they're asking, can you explain the difference between automated intelligence and augmented intelligence?
Certainly, that's a great question. I think one of the things that always makes life difficult is what does AI mean, right? And I think so few of us understand it well enough to be able to pass it. But let me give it a stat the way I think about it. And we tend to use the term augmented intelligence. And what we mean by that is if I come in to my bank, ABC Financial, if I meet a chatbot, let's call it that chatbot Erica, because some of you may have tried that. That chatbot is going to spend the next 20 minutes taking me in circles, talking about what the chatbot wants to talk about. And I think that's one approach. I don't love that approach. I think more often than not, customers really do not like it. Augmented intelligence is about making my life easier and making the life of the banker easier. So if I come in and I want to talk to Lexis Bank, and Lexis Bank start by saying, hey Soren, if you're after your routing number, nearest branch, or this you can actually manage that yourself right here. You don't even have to wait for anybody. But if you want to talk to a human, you can do that here. Now, once we get into that human interaction where we feel that AI can be extremely meaningful is by supporting the banker. So if I come to Lexi and ask about a mortgage, why would you not have a platform say, hey, well, Lexi, when other customers ask about that, this is what your colleagues generally responded, and start synthesizing responses, pulling out documents and saying, Lexi, we have some documents that are relevant to a mortgage conversation. We have some disclosure. We have bigger documents that you can send, and really surrounding Lexi with that digital assistant or the augmented intelligence that just makes it easier for Lexi to respond correctly, provide the right materials, analyze the conversation. So Lexi doesn't have to tag, this was about mortgage, the platform will do that. And in my mind, it's about who has lead. Artificial intelligence is a virtual assistant that tries to run the conversation, and you may be able to escalate for that. In my mind, augmented intelligence is human-human. I want to be helped by a person, and we have surrounded that interaction and that person with things that make my life and my banker's life easier. If that makes sense at all.
That does. That was a helpful differentiation. So thank you. I think what would be great now is if you both just want to share some final thoughts as our audience, signs off and maybe goes to reevaluate some of these processes or what their user experience is like. What are some words that you would want to leave them with? Caitlin, I'll start with you.
Yeah, great. I mean, I definitely appreciate everyone's time, and I, wish we had time to go longer because, Soren and Agent IQ could definitely talk for several more hours. But really, the key takeaways that I would love for the audience to take away is one, accelerating account growth through mobile optimized DAO. So having a optimized, fast, great user experience in digital account opening is really just the best way to get users in the door, crossing the threshold, and really helps start a great relationship with them. When they have a seamless account opening experience, it really sets them up to engage well with the digital banking platform, and really helps to convert that customer and be their primary financial institution. That's the first step, and then after engaging them, giving them what they need and offering them the services that they want that will, improve their financial health really at their fingertips and be the one-stop shop. That's really how you get folks in the door, delight them, continue to, drive engagement, drive deposits, and grow, a financial institution, a bank or credit union. And then on top of that, making sure that all of that is just in a really great UI UX. So NARMI's UI UX lab that constantly tests user feedback and really strives to build the best-in-class user experiences across digital banking, gaining insights not only from other banking institutions, but also across retail and social media and other sources to really continue to just delight customers through time.
Thank you, Caitlin. Soren, what final thoughts or takeaways do you want to leave with our bankers?
Yeah, thank you for that question, Lexi. I would say be very clear on why your customers come to you and stay with you. Chances are it's not because they couldn't find Bank of America. So find out, why do they care about you? Now, you have to figure out how do you bottle that. And we believe for community organizations, this is about relationship. How do you enable these relationships without trying just to give customers bigger and better cookies? You need to engage them where they are. And the reality is this is here. That's the mobile device. That's where they want to go. So I think be very clear on that. Figure out how do you make that personal relationship digital. After that, get started. This is, when you look at the white piece of paper, can be terrifying. And what we have found was even a large organization like First National Bank Omaha, they launched the service within months. They started with 8 bankers. And they said, you know what? 8IQ and 8IQ's client says that this is really good. Now, we don't know about our clients, our customers, are they going to like it? So get going. As the CEO said, today is the worst the service is ever going to be. This is the day we launched it. That it's only going to get better from here. But the best way of getting feedback is engaging your customers. So get going. As I said, we have had Park National Bank Omaha launch within 4 weeks. And it said, we know this is going to be test and learn. We want to go out, we want to learn, we are going to get the benefit of AI, analyzing conversations and giving us insight. Let's respond to that. So it's really about finding out why do customers, why is it your customers come to you, digitize that, get going. And for me, that's really, as I said, our standard engagement model is that let's get going quickly, 4, 6, 8 weeks, let's get going. If you find after a year that your customers are not taking to this, that's really sad. Let's go shake hands and we'll have a drink somewhere. But right now, I mean, we have 100% renewal. We have never had a bank turn off the service that enabled through 8IQ. So I think for me, it's really, we can't stand still. The biggest risk we have right now is not doing something.
That is a great note to end on. I want to thank you both so much, Caitlin, Soren, for your time today, sharing your thoughts. I think this was a great conversation. As a reminder, everyone will receive the recorded version of this webinar within 24 hours, and it will also be accessible on bankdirector.com. Please be sure to visit our upcoming online event page to register for June's Xchange next month, where we will be talking about data and analytics. I hope everyone has a great rest of your day.
Thank you.
Everybody.